The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday at this time, and just finishing some notation here. I lost it. Something happened with the internet earlier on. I had to shut down, so I'm just renotating what I'd done before. This is the S&P cash. Went to a peak D, a double top in the 5-minute charts, pulling back quite sharply. We've got let me look at this one here. This is the futures. Had a single leg A to the upside, that big spike that I talk about. It doesn't have to be a single leg A. It has the characteristic of that pattern that I call the Eiffel Tower, straight up, straight down. It had made a peak E in the Chapman wave way back at 140 this morning, 140 to 150, and that was at 2167 round number, triple top high, and it's pulled back quite sharply since then. This is a fascinating market because within a trading range, it's just been chopping up and down, but it's really just stuck in a very, very narrow trading range. So let's go to the numbers. The Dow is, I'll do it with the charts. Here we go. The Dow is at this particular point down. It is down 40 at 10,296. Wait a minute. What happened there? Okay. Do it again. IND. They must have changed something here because it doesn't just automatically go to the rectangle over here with the price. So we've got the Dow, and it's been trading range since the August the 15th high, all-time high of 18,668, trading now at 18,299. So what is that? That is still within a 400-point range of the all-time high, and it's taken 6 weeks to just chop around. But what's most important is that there's a trend line here that it needs to break above, and that's at 18,400 to 18,410 strong resistance. And the support it needs to hold is the 18,250s and then 18,200. Just keep it as simple as that. The weekly chart, I can't see how by tomorrow it's going to go above 18,668. So we've got to consider this as a peak E in the daily chart. Let me just move this away. And in the monthly chart, pretty much is going to be that first peak C that is like a yellow light to say from here, there are a whole bunch of things that can happen. We could make just a sneak to the upside in October at 18,669 or higher, and that's leg D. And then, you've got to be careful. But wait a minute, do you have to be careful if the S&P, the SPX, which right now is down 4.5 at 2166, and having made a peak D, pretty much a peak D in the weekly chart, but it's still only a leg B in the monthly by tomorrow. If it doesn't break above 2193.81, we've got our peak B. But what happens very often is when you get this tiny little peak at the top, if the next month opens lower immediately, you've got to be careful. But if the first week of the month starts to test the highs, there's a good chance you're going to go slightly higher, and that will make peak C. Leg C, if there is no new high tomorrow. And then what we're looking at is a whole bunch of things that are absolutely so fascinating that I'm going to spend tomorrow talking about it because that's Technical Friday, Chapman Wave Technical Friday. In the meantime, support is at 2160 initially, then 2150, very important, and a breakout would be this trend line right here all the way up at 2184. So that's another, it's about another 20 points, another 200 Dow points. Look at the QQQ. This is so fascinating because it's supposed to make a D. I'm waiting for that D in the daily. But wait a minute, it could be a peak D in the weekly, but with an inside bar. That means the high and the low this week are within the parameters of last week. And it's still a very strong price point in the monthly of leg B, but the technicals are still lagging quite considerably, and the MACD hasn't, whoa, this is so interesting. The MACD 564 and 584, oh, it is so close. It hasn't yet crossed positive. Okay, let's look at the IWM. IWM is the Russell 2000. It has made a peak E alternate count. I can call it an E/C, but it's a weekly peak E if there's no new high this week, and the monthly is improving a lot. When I put these charts together, the bigger picture seems to be very strong still. So it's for the short term to really cascade to the downside, to really impact these others. If you look at the New York Stock Exchange, now this is going to be interesting. Look, New York Stock Exchange is way lower. There's no way in the next 2 days that it's going to get above 10,903.86, the high of the 8th of September, which was peak C in the weekly chart and leg B still in the monthly. And here we've got to look at it and say, you know what? We could chop sideways, slightly lower lows and lower highs, if at any point in the next 3 days, that's today, tomorrow, and Monday, if the New York Stock Exchange closes below 10,690, I'm going to have to say, aha, that's the root of the condition, and we've got to consider it. Let's just quickly go to the gold. Gold wasn't acting all that well before. Now it's down $1. It's making another one. It's like the Eiffel Tower twice. But most importantly, look at that weekly chart. See the trend line? It looks like it's making lower lows and lower highs. I said slightly lower lows, slightly lower highs and slightly lower lows within a channel formation at this point. And the monthly chart had a spectacular 8 months to the upside. This is the first peak A that it's had from last month's lower high bar, continuing this month. My thinking here is that 1322 right now, there's a good chance that we're going to go to between 1288 and 1275. The 9-period moving average in the monthly is at 1277. I was asked about the GDX. Let's just do that right now. GDX, same thing. And the question was, where would I be looking at for key support? 2517, the low of the 1st of September. It's going to be very important that that holds. If we, on a weekly basis, we close below that in the GDX, the market vector gold miners index, that's not a good sign. Next thing that I want to look at is crude oil. I want to get these out the way because there's a chunk that I want to do today. Crude oil is up 31 cents. This is all a hoax. I mean, all the stuff that's going on. Yeah, they're trying to form a base, but you know what? Crude oil can chop around, but the longer term to me seems that it's inevitably going to go lower. That's the way I'm looking at it. In the meantime, back at the ranch, what we're looking at, the Dow's starting to accelerate down. I wanted to show that, and I wanted to show the TLT, and I think we've covered a chunk. TLT repelled at that Chapman wave inside track repellent zone. Is down 51 cents at 137.90. Then we're going to look at high-grade copper, HG. High-grade copper is just trying to make a leg D in the weekly, but it's in the daily. Weekly is still going to in a downtrend, so we're going to be following that. And there was one other thing, dollar, of course, the dollar. The dollar was up. Now it's a little bit, it's neutral. Up a penny at 95.44, just stuck in a range. Both gold, actually all the commodities is kind of stuck in the range, but the commodity index is starting to show some signs that it's trying to move higher. I'll be back, Basil Chapman, Tiger Technicians Hour. Love to hear from you. And as we sign out, Dow's down 56, S&P's down 6. I'll be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So, let's just go through a couple of things. Yesterday, as the show was ending, I mentioned that we had a position which I had no choice because we had the stop and it got hit in the pre-market. We were short CTAS. It's one of my leading indicators over the very long term, and that is an overall clothing rental company. And what happened was we went short at 114.01. The high was 119.94. And you know, as I try my very best to do, we did that with the IBB just off the top in July of last year, where we shorted it and we did extremely well. And we had another one which just recently, Ulta Cosmetics, where we shorted just off the top. The all-time high was 278.63, and at 270.11 we shorted it. It's trading now. It hit 235. It's trading at 238. So I do try to use all the techniques that I have within the Chapman Wave. So the CTAS is one that we followed. I was very patient. We finally got, I thought, a very good entry point. And I anticipated that even if there was going to be an earnings report that was good historically, that is looking back, going forward, they're going to have no choice but to say there's some uncertainty, just based on everything you read about what many of the companies are saying. Now, what happened was yesterday it gapped up and went all the way to 118.90. We went in short at 114.01, and I had a 117, I can't remember exactly, 117.60, I think, or 70 stop. So it went just above it, and then what happened is we got taken out for a 3.69 loss, a minus 3.2%. Usually for these things, I don't like to take more than a 1 to 2% loss. This is a little bit more than I anticipated. Therefore, this morning I said, okay, we're going to go. And that was a half position, a little bigger than we usually take. This morning I said, on a small position, let's short it again, but let's short it above, because I anticipated that there was some residual strength there because of the way it was trying to act intraday yesterday. So I said to short, what did I say? My exact number was 117, I think, 117.70. Unfortunately, the high today was just over 116, and now it's trading at 112, having hit the 111s. It's done exactly what we were anticipating. So I wanted to just talk about this because this, I'm not to brag about missing the trade, having the trade, and then missing the trade, but to talk about the way the market is acting, because the really powerful look at the stock. I mean, it's just been on an unbelievable tear to the upside ever since the low back in 2009. Look at the 9-period moving average. In all this time, every single month, it's only traded. In fact, until from the move up, let's go to October of 2011. There were 2 intra-month moves down, but closed above the 9-period moving average, the thick black line. And then there was just 1 month, that was that ugly month of February of this year, where it slipped under and closed a little bit under. And then what happened is it went right back and it soared way higher than it's ever gone above the 9-period exponential moving average. Now, when you see stocks like this is CTAS, look at Alta. Alta, same thing. It's just an incredible thing. If you take it, even if you only go from July of 2014, it pulled back under the 9-period moving average 4 times, and once it closed just about on the line, but every other time it's just soared. Now I'm saying to myself, if these major companies, there was another one on my mind, but let's just go to these. If they are struggling now after such spectacular moves, and having, now I must say it's an intra-month move. We've had intra-month moves like this before, whereas they've closed higher, but I'm thinking tomorrow it's not going to close that great. If they're making what I call hat-trick tops, in other words, this is not only in the monthly gone to a leg E, and almost certainly by tomorrow is a peak E. The weekly chart has gone to a Chapman wave 5, which is also an Elliott wave 5, and that says a serious pullback is coming. But I'm expecting that Alta, Salon, ULTA, trading at 239 down 110 right now. These are key stocks that have now started their bigger consolidations. We might not see new highs for a year maybe, but at least for a few months, there's going to be a downtrend. And that says to me this is becoming a really selective market. That's the first thing I wanted to talk about. The second thing is, within the context of markets, yes, we are short the Dow. I haven't added to the position. I probably should have had it exactly where I wanted it the other day, but I don't think this is the case. There is just enough upside momentum in the Qs, I believe, to have some, within the next 3 days, to have some kind of a move that just sneaks above 119.22 to give me that D. It'll be so unusual to go to recovery highs in the Chapman wave methodology. Let me just explain it this way, first of all. In the Chapman wave methodology, there is a technique that I developed way back, just I guess as automobiles were coming in and before airlines started up, way long ago. I'm just pulling a Larry Pesavento here. And did I lose that chart? I'm just trying to find my peak D chart. Hey, why would it disappear? That is really a very interesting. This is the 3rd time in 3 weeks that I've had this up. Did I just wipe it out? Oh, what a pity. I'll have to redraw it for the 900th time. Oh, no, there it is. Nope, that's not it. That's global warming that I saw that was being discussed by Nico this morning, and I counted the waves. Let me just show you something here. Look, I've never seen this chart in my life. Sunspot integral versus global temperature anomaly. New study confirms solar activity has a direct impact on Earth's cloud cover. So what do we see from the low bar of 1749, right? Just 6 years before Mozart was born. You go peak A, B, C, D, E. Then you get your big pullback of just 3 troughs to the downside. That's usually bullish if it's only 3. And then you go A, B, C, D, E, flat top, a little sneak to the upside, call it an F, right shoulder failure, pulls back in 3 waves, and then it goes A, B, C, D, instant restart, A, B, C, D, E, and now you're getting your biggest decline. I would suggest to you, and of course, when some of you might be around in the year 2075, somewhere around there, got a feeling I won't be here. You tell me, and when you're looking at your sunspot integral versus global temperature anomaly, whether this isn't a major top right now, especially with that spike there of whatever it is, I would suggest to you that there's a change coming over the next 50 years. All right, so we got that out the way. Now, I can't find it, but a peak D, there's your D. So I want to find a clear one. All right, well, all it is from the lowest, most identify low bar. You merely count each successively higher peak, and you should get to a D. That's really what it is. And we haven't got to the D, and I think we will get to the D, maybe next week. So here we go. The other things I wanted to look at was the volatility index. What is going on here? So the market is down 60, 70 points. S&P is down 7 or 8 points. And the VIX index is up 57 points. But it is still underneath, for the moment, underneath the 13s, underneath the teens. To me, that's spelling support. It's spelling the chance to at least have one more up spike to complete these moves in the SMHs and the Qs. I'll be back. We'll talk about it as soon as I return. Basil Chapman, Dow's at 56.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
I have a couple of quick questions I got here. So VIPS is one, which is VIP Shop Holdings. This is very interesting. The monthly chart is starting to improve. It's at VIPS. It's trading at 14.93, down 2 cents. I'm going to put an up arrow because the stochastic's at 81% and the MACD is good. I'm just going to suggest that at the 15.50 level, the pattern that I'm looking at resembles more of a rectangle, which suggests to me that, yes, it could go from 1491 to 1549 for leg D, but you just got to be a little careful because this rectangle formation could continue a little longer, and I don't like that big spike up 5 days ago and then no follow through. And it's suggesting to me the rectangle pattern is the one that I've identified and probably correctly. And if it takes out 1466 as support, then it's kind of stuck for now. 1433 is liable to be tested in the weekly. It has no choice. But by Thursday, Friday, by Monday, by 3 bars time, it needs to be at least testing the high of 1539, the candle of the 27th. So if you're long, I'd say, yeah, okay. The weekly chart is really a very nice looking chart, but I need another 2 weeks to say that it started a leg B about 1548. I don't want to see it slide under the 1430 support. So would I buy it or would I sell it right now? I suppose if I had some fundamental news and I liked it, then this is a perfect time just to start the position. And since it's going to go to leg D and I think it's going to come back and test the middle point, I wouldn't get carried away. Normally, I'd say I'd add another small position at 1549. In this case, I'm not. I'm just saying, yeah, nibble now. I wouldn't even nibble. I'd wait for a little bit of strength. I'd rather buy strength on this stock than weakness, because weakness says, oops, that single leg A in the weekly chart, because it's failed to get to even close to B for a while. So, to tell you the truth, I'd put it on my watch list just for now, maybe a day or two. I need evidence. Now, a couple of things. I said the commodity index is moving higher, TRCCI. That's our Thomson Reuters commodity index. And you see how the monthly has held the 9-period moving average support. The MACD is still good. The stochastics is 79, not 80. I'd like it over 80. And the weekly chart, almost like the one we just looked at, is okay. I'm really relying on one of the ETFs that actually has a much better mix for it as an ETN, I think it is, or as a fund. And that seems to be working very well. We do own the one that's gone from the 1460 level to the 14. It's almost 15 right now. Against this backdrop, I'd say that's nice action, not great. So I'm looking at the different commodities, and I'm going to get to crude in a minute because I think it's very important right now to be looking at. So here's the corn is just stuck. Wheat was stuck yesterday. Today it's down a little bit. Soy. Okay, but stuck at the bottom of the range, having made a leg D to the downside. Hey, wait a minute. High-grade copper is actually acting quite nicely. It almost went to the D today. Nicely in the daily. The weekly is still stuck with that resistance level. So I'm not sure quite what's going to make the commodity index natural gas. It has natural gas. Natural gas has made a peak D and is pulling back. So I don't know what it is, but it is acting very well. I'm happy about that. Subscribers should be happy about it. But I tell you, I only did that on chart because the more I looked at the commodities, I couldn't understand. For instance, gold is part of it, but it's not helping. So let me just go back to CCI and see what's in it. I've got it written down. Okay, here we go. This is the Thomson Reuters Commodity Index. And it's an equal weight. So it has, hey, why didn't I have everything in here? All right, I'm not sure what's in that. All right, well, all I'm saying is that whatever is in the one that we like, oh, look, the daily is acting quite nicely. That's what it is. It's holding quite well at the 9-period moving average. Not great. So I'm not sure why. I'm not going to complain. So a couple of things I want to do here. I promised I would look at the crude oil for a number of people writing in. Let's see. Crude oil, Exxon, COP, MRO. Is there a trade we should? Okay. Now, we've had some callers. We've got some really astute listeners. I could mention names. Oh, do I see the call? No, I don't. Oh, I was going to say I could mention names. I could mention Brent. I could mention Carlos. I could mention Scott. I could mention a number of people, but I'm not going to mention their names. Oh, my goodness, look at that. Brent from Martinez, California. What a coincidence. Hi, Brent. How are you?
I'm doing fantastic, Basil. How are you today?
You should be fantastic. You are our leader in the sector, man. I tell you, rig is what you were talking about, and you got in different ways of getting in with calls and the long position, and you were in at about, I think, 9, just about 9, under 9, I think, and it's trading now at 10.83. Leg B, whopping leg. Now, this is a problem with this sector, the oil service sector, even just oil in general, but especially the oil service sector. The moves are so quick that if you aren't in it, for instance, after your call, I looked at it and then it acted kind of poorly. But by the time I wanted to do something the next day, the candle was already moving up. Then it acted very poorly again. Even yesterday morning, it was acting lousy. Not lousy. It just wasn't acting well. No, it was acting lousy because it looked like it was going to make another H pattern. And then out of the blue, you get this, the discussions come to a head, and the oil, there's some, what can you call it, an agreement? These guys don't agree on anything. But anyway, there's this sense of an agreement, and lo and behold, it goes from the 940s to 1080s in 24 hours. So it's very tough. So you were absolutely prescient in getting in beautifully. I think your rig, and I think NE was the other one, Noble, also in leg B to the upside. Brent, you should give us your phone number so I can call you and I can say, hey, Brent, what do you think of Noble and what do you think of rig? So you tell me, what do you think's going to happen?
Oh, they don't always work, but these two just had some formations that looked interesting, and they were kind of surprisingly in a group that there was a lot of them that were acting better than these. They come way down, and they're ones that I kind of watch from time to time, and I was trying to be patient. It was more with rig, to be honest, and then I do watch Noble as well, but I think they have the potential to, rig's getting close to my target, really. I was looking potentially for like a 12, something like that. NE maybe up to, could go as high as maybe 8. And these are ones I want to hang on to longer. I think if I have actually caught the bottom correctly, I'd like to give them some time to play out. And it's always a little tricky when they're making these big moves like this because it could give it back quickly too. So I just have to watch it closely and just keep doing what I've been doing all along. So that's kind of my thinking.
Yeah, for me, if there was a pullback today, and the pullback held from yesterday's close in rig, which is Transocean Limited. The close yesterday was 10.02 after hitting 10.27. If there was a pullback and oil was weak earlier on in the morning, then I would have said to subscribers, you know what, let's start a position. I'd mentioned in my newsletter for about 3 days, these particular stocks. But I would have needed a pullback. So I absolutely would have missed the entry again today. Hey, can you hold on? Because there's something I wanted to ask you about. You got a moment? Good. We'll be back with...
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Whoa, a whole bunch of questions I've got there. So this is what it's very interesting. Valero, which is in the refiners, these are oil service that we're talking about, but Valero is plunging down 278, down 5% at 52.33. It can't hold its gains. So Valero Energy, oh, this is interesting. So now what I need to do, so Brent, you're mostly in the you're in the oil service sector, right?
That's the only place presently that I'm in. I just, these 2 stocks, Noble in particular, I went way back. I mean, you have to go back to, I think it's 1998 to be at the lows that was just, last week. So, and that was a little trickier for me. There wasn't really anything. I mean, there's a couple of things technically and just on the chart that looked okay, but not the same as rig. But I just took a chance with that one because it, like I said, going back as far as I did, it was, 10 bit those lows for such a long time, and I just 2002,
2003, 2004, it was testing the lows of around about $18, somewhere around there, and the most recent low was $7.66. And if you want to go even further back, let me see. Yeah, I can go further back. You can go all the way back to 1994, $7.81, and the recent low was $7.66. Wow, that's a full return after a stock that once upon a time hit 163 round number high. Oh my. And that was an ABC perfect peak D. Oh my. Yes, so this is the area where you would expect it. However, I still think that crude oil is the key over the longer term. So I'm going to just say to you that when you have news that gets repeated, in other words, if the consensus, so-called consensus yesterday is magnified because it gets re-emphasized over the next day or 2 or 3 or 4, then you've got the wind behind you. You've got the wind allowing you to hold your position. So I'm not going to say anything. You got in perfectly. You'll probably get out perfectly. I'm only going to say to you, I think at this particular point, yesterday, 24 hours ago, none of this was looking very good. Yes, there was the chance that it could bounce, but there wasn't that. You need that spark. You need you need to light the fuse, and you finally got that yesterday. So what we're looking at is that might last a little longer, And all I can say to you is if it's possible, maybe through the options, you take your profits, but you try to keep your core, some kind of a core, and see this time. Remember I said to you, I think it was 2 times ago, that if it was going to succeed, you needed the weekly chart to really hold the 9-period moving average, and then it failed. Tomorrow is the end of the week, and that says that it's a really good chance that this time, not only will RIG hold its 9-period moving average of 10.09, it'll close nicely above it, even if there's a weak session tomorrow. So this says to me that there could be at least one more week to the upside minimum. But if next week it produces a result that says there's a close above 1835, 1845, somewhere around there, that improves the monthly chart for the very first time, as saying, right, now we've got another leg to the upside. So I don't want to say I've got 1123 is the 200-period moving average resistance. I don't want to get in the way of your beautiful entry point at all, other than to say this time I wouldn't put it in the category of grabbing your money right away. I would try to hold on as long as possible by raising stops and keeping your core position as long as possible. That's just my thinking.
We're right on the same page, Basil. That's what I'm doing. So I really appreciate your help, as always, and just have a wonderful day, and I'll plan on talking to you soon, okay?
Thank you, and congratulations. Once again, it was really a beautiful position play. Thank you. That was Brent in Martinez, California. So we got George in New York. George, how are you?
Basil, good morning. How are you today?
I'm well, thank you.
Good, good. The weather, is it rainy up there?
It's been threatening, but it's not bad. Yesterday was kind of drizzly, so we're looking at something that, hey, for this time of the year and after the summer we had, we need a little rain, and we've had a spectacular summer weather-wise.
Yes, true. Yeah, it's cloudy here today. The question for today is Oasis Petroleum, OAS, the frackers.
So now, do you have a
production.
position? So do you have a position in this? Or not?
Actually, I do. I have a synthetic position, what I call. It's with leap calls, and I've also sold naked puts going out to January 17.
Okay, so let me just, for 1 second, I just want to say, folks, when George says he's got naked puts, that means that he's expecting the price to rise and for the puts to shrink in value. However,
Correct.
At the same time, he's ameliorated any sudden catastrophic turn because he has the other side of the coin. So what he's done is he's got a little insurance. He's going to pay a certain premium for it, but it's allowing him some comfort, right?
Very good explanation, correct.
Okay, now I've done a little notation as you were talking because, as you know, it doesn't take me very long to do my notation. I'm calling this leg C in the weekly chart, OAS at 1166, up $1.21. Huge percentage move, 11%. It had a fabulous move yesterday, having another one today. Normally in this type of rocket ship move to the upside, the third candle, which will be tomorrow, is the candle that often produces a small doji candle, and then there's a bit of a pullback, and if that pullback is shallow and there's a brand new spike to the upside, in this case, you really want to see $12 to $12.10 resistance taken out very quickly. If that's the case, I suddenly jump from the weekly chart, daily chart I'm looking at right now in leg E/B, but then I move over, not to the weekly because that's already broken to a new recovery high. I go to the monthly, and the monthly says we're in leg B. There's been a beautiful turnaround in the technicals, and this is a move that if it can hold support, I'm looking at a worst case basis between $10.10 and $9.80 on any serious pullback in the next 3 weeks.
I could live
if
with
we can
that.
hold that. That's good.
Correct.
That's what you want to see.
Yes, excellent. But I like the way it's setting up now from the bottom on my daily and my weekly with the volumes. And if I could ask, on a daily chart, would you say this looks like a Head and Shoulders bottom that looks like I could have a target of about 1475 on the upside?
Are you talking about the monthly chart?
Daily. Daily,
Oh,
1 year daily.
Because the monthly chart has a sloping head and shoulders, inverse head and shoulders, which is sometimes a bullish pattern. So let's look at the same sort of thing in miniature in the daily. You know what? This is a pattern that says forget about inverted head and shoulders, necklines, and all that. This is a pattern that says that there's a potential for a move that is equal to the consolidation from 656 to 1041. Let me just do that. Let's call it just under 4 points. So from the low of 876. So that's $12.50, $12.60. It's really the measured move that I would get on a short term. You want to hold on?
Yes, please.
Okay, good. So we've got George from New York. We're holding on. As you know, George likes to look at the fundamentals. And that's very good because there's technical and fundamentals here.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, George. George, before we go any further, I just want to say I've got 5 emails lined up, and I've got a caller waiting. And I'd love to hear, and I had questions in the den. One question is, how did George find OAS? Would you be able to maybe either email me or call tomorrow? And I'd like to take one segment
my
and go
pleasure,
through
Basil.
your thinking.
Take care of the other calls. My pleasure.
So I'd like to hear from you. The question is, how did you find this? And I'd like to know a little bit more fundamentally. So if you want to call tomorrow or email me, and I'll impart that knowledge tomorrow. Hey, thanks so much, and I like it.
Pleasure.
Thank you so much for calling. Let's go to Dan in North Reading. Dan, how are you?
Good. How are you, Basil?
I'm well, thank you. You'd like to look at
at GoPro. I currently own it and thinking of adding to it. Just wanted to see what you thought.
I keep meaning to look at it because I also watch. I don't watch CNBC. I don't have a TV on anymore in my office. I just decided a long time ago that it was just a waste of time. But I actually do like occasionally to go to the TV and look at the ticker, just to look at the ticker. I don't listen to sound. And I saw GoPro a number of times over the last 2 weeks flashing by. So there's something going on. GoPro, folks, is that camera that you put onto helmets and stuff like that. 16.53, minus 46. And I have to tell you, there's been so much talk about competition and everything. And yet this darn thing just won't give up. They're already pushing from the low of below 10 to now 16.55. Now, I'm going to say to you, I like the chart. I was going to take a little more time to actually investigate it technically the other day and completely forgot. Now you've just reminded me. I like this action. There's something going on, and we're going into the Christmas season or holiday season. So I'm just going to say to you, if you're along, you'd like to add, I would like you to think about 16.55 right now. 16.30 to 16.10 is the level that I'd like it to pull back to, and then immediately bounce off the 9-period moving average of 16.13 and go back above the 200-period moving average, which is at about 16.55. So that would be my plan. But I also wouldn't get too carried away because the weekly chart is acting well, but it is an either leg E. It might have started an A, but I'm going to think of it more as an E right now. So I would immediately grab a rectangle formation in this particular pattern and say, you know what, unless it really closes above 17.55 in the next 2 days, it might just chop around you a little bit. So that's the level. If you want to add to it, I'd get just a small position, but I would add to that position 1 penny above 17.41, and that would be a trading position. Small here, and I'd have a stop of about 15.71. If you think that's too tight, you can make it smaller, but somewhere around 15.80 to 15.71. And it needs by Wednesday, next Wednesday, needs to be climbing. I want to see it nicely above 1741. Then you got yourself a nice core position and a nice trading position, split into two. So you're going to have a small little position that you add in the 1620s or so. And if it breaks above, or if you haven't got it and it breaks above 1741 at 1742, you add to that position, and that's a trading position with a much tighter stop. Why? This is the one that has to go to 1768, 1778 very quickly. Hope that helps you.
It does. Thanks, Basil.
Thank you very much for calling. So, folks, I had questions about RTH. This is the Market Vectors Retail Index. I'm kind of concerned about this. Weekly chart, peak E. Daily is made a peak E. Weekly is E/B. I'm watching this really closely. Caterpillar. Now, crude oil, just a real quick question about crude oil. Once you've got a little headwind like you have right now, I have no choice but to say that was a switch yesterday. I have to now say that crude oil looks like it wants to go from 47.95 to 48.55. The big test is right there on the 19th of August at 49.97. You want to see crude oil, if you're bullish, anything in the crude oil area, you want to see it trading in the 50s by Tuesday of next week and not pulling back from 47.90 to 45.90. So I hope that helps. Hey, folks, have a great weekend. Check out my opening call this weekend. We're going to have a lot of information. And, I'll be back tomorrow. Of course, Friday. Have a great day. See you tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.